Welcome to Global Risk Community Chat. Today our guest is Carl Larry. I'm very happy to have you here today, Carl. Welcome.
Thank you so much for having me.
Yes, likewise. So before we get into the topic, can you briefly introduce yourself to our audience?
Sure. I'm Carl Larry. I work at Wood Mackenzie with Genscape on the short-term oil analytics side. I've done oil and products, refined products for most of my career, Chicago, New York, and Houston, mainly in banking, ABN AMRO, Citigroup, Credit Suisse, and Barclays.
Sounds super cool, actually. And with that being said, then let's jump into the topic. What would you like to share with us today?
Well, I think we can focus on what's going on in the world of commodities and risk and inflation. I think it's really changed the dynamics of the way we look at things, especially when it comes to risk management.
Yes, I completely agree. Then let's hop onto it. So what are some key things you can share about this, about, commodities in general, maybe about the inflation that is happening?
Pre-COVID, everything seemed, as it was, but during COVID, people said this is an anomaly, this is a once in a lifetime thing. And the economy and the structure of commodity financing and commodities in general really had a big shock. Demand went down, everything seemed, different. But post-COVID, we're seeing a lot of inflationary pressures. We're seeing higher prices for oil, for natural gas. And with that, comes this really tough thing that you have to work with, with inflation, rising interest rates, overinflated prices, and it's just really hard to find a good way to manage your risk.
Yeah, and then what are then some more things you can share regarding this, how to manage risk, especially in 2022 and onwards, or what are some challenges on this?
Well, the old tried and true saying less is more is pretty much where we're at right now. Unfortunately, because high prices are there, I think it's more of a cash and carry type market right now. Before, we used to use financial instruments such as swaps and derivatives and futures, but now because of rising margins, rising borrowing costs, and just tightening credit lines, we really are just seeing more people just going from hand to mouth. Whatever you have in production, whatever you have in storage is what goes right to the market. There's not a lot of room to play around that, and you just have to be really careful about that right now.
Yeah, and what are some suggestions then you could share with our audience regarding this?
Well, I think that we have to be a lot more careful. Obviously, when volatility is higher, we tend to think that this is a good time to make money. But in this situation, in this time right now, the volatility is actually telling us not to take more risk. It's to ease back a little bit. So stick to what we have in our margins on production, on storage, and really kind of make money from there. Plan your budgets around that. Don't plan around speculation. Right now, speculation is more dangerous than volatility, and that's what we have to worry about.
Yeah. And I think because now I, of course, hear that there is some inelasticity, essentially. That means that I guess there's not as much as flexible room for the commodity traders to play in. So they need to play more safe and careful around. So what are some methods or tools you use to, plan more based on this?
Yeah, and you said something really interesting there, inelasticity. Normally in commodity markets, we've seen that demand elasticity reach a certain point before demand comes back, prices readjust, and we see that come back down. This is the first time since 1970s that we've seen, commodity prices for sure, but overall inflation really just started pushing boundaries, just trying to break out there. So the difference is we're not seeing demand bounce away from that elasticity. We're not seeing that elasticity and that snapback of rubber band. So what we are seeing is it keeps on going. And again, it's an anomaly that we've seen during COVID and we're seeing post-COVID. So, really what we're really trying to do now is that say, okay, let's cut back on that risk. Let's kind of wave down VAR, and let's just kind of just do what we can, have what we have, and make money on it. But it's really a different environment. Before, when we saw high prices, everybody hedged as much as they could, as quick as they could. Now we're not seeing that hedging in anymore because we think that this period, it'll last longer on the physical side than it will on the financial side.
Yeah. And would you like to elaborate a bit more on that?
Sure. Again, before when we saw, let's just use oil prices would go to $147. And we knew at that point the economy was not going to be able to handle that. And then of course 9-10 with other financial instruments going south, we saw demand ease back into a normal range. This time though, we've seen 80 to 90 to 100 to 110 to 120. I mean, oil prices keep going. In that fact of the matter, even gasoline has gone over $5 a gallon here in the U.S. for petrol. And normally we'd see demand start to ease, but we're not seeing that happen. We're seeing demand actually increase. Jet fuel, gasoline, petrol, diesel, these prices usually start to slow consumers down, and right now they're not. And so that's the difference here, and that's just something that we're dealing with. You can call it inflationary, but you can also call it a snapback from COVID. I think people right now are not really focusing on what they can't do; they're focusing on what they can do, and that's where the big anomaly is here in this situation. So you just have to change your thoughts about risk management.
Yeah. And I think, like, as you said, there's an anomaly. And I think, like, regardless of what we call it or what we think the cause is, I think the important part is that it is crazy times, and risk managers should be just adapting to these crazy times, essentially, with commodity trading and also in many other fields too. With that being said, I want to follow up on the next question, and that is, can you share some main takeaway points for our viewers that they can start implementing right away? Because obviously I hear that risk managers should, approach it in a different way, but what they can do more, if we were to put them in more terms.
Sure. I mean, now any business, whether it's commodities or whether it's a financial, like money or currencies or what have you, before, when volatility increased and where we saw demand elasticity start to get to the end, most risk managers would say, hey, let's put more risk on because we know it's going to come back our way, and make sure that our currency, our commodities, our money that's sitting in banks that's earning interest will be safe. But now it's changed dynamic, and risk managers have to adapt to that. Just as they adapted to what happened during COVID, they're finding themselves really trying to adapt to what's happening post-COVID. Again, we can stress inflation, and this is something that historically we've seen happen before, and we know the repercussions. But this time, this inflation is going on longer than ever. If you can remember back to the Great Recession, that was a recession that lasted almost 18, 19 months, something we've never seen before. Well, now this inflationary period where we're seeing this extended amount of inflationary pressures, you have to adapt your risk management style to say, hey, this could go on longer for than I expected or than anybody expected, and we have to adjust to that. It's not the anomaly now. Now it is it's the course of the way the markets are working.
Yeah. Thank you so much for sharing that as well. I want to just follow up with one last question, and that is how it is for you to be part of risk community in general, because obviously you've been in very different fields, also, commodity side, the financial side, how it is for you on the risk side.
Well, I think that, we talk about COVID and post-COVID and inflation and demand inelasticity. The interesting thing is that it's being a part of history right now. I mean, nor myself nor any risk manager right now is probably looking at this and saying, this is an amazing time. I mean, yes, it's a struggle. Yes, it's more challenging, but at the end of the day, I'm going to look back and say, this was historical. This was something that never happened before in a lifetime, and we're part of it. So being part of the risk community right here, right now, is really an interesting time, and it's an exciting time to learn, to adapt, and to go forward.
Yes. Thank you so much for sharing that as well. And with that being said, we are unfortunately out of our time for today. So I want to thank you so much, Carl, for joining us today, sharing your insights, this expertise you have on this topic.
Very good. Thank you so much for having me.
Thank you. Have a great day.
You too.